Wall Street is back in the green after a roller coaster of trading this week. Local financial advisor Bruce Allen of Bruce G. Allen Investments talks to us about what may be causing this. Bruce, good morning.
Good morning, Gary.
Yep, so the markets have had crazy swings. 900 point loss. What's been going on?
We've seen on Friday the market was down 900 points, bounced back a couple hundred points on Monday. We were down 650 points on Tuesday, and yesterday at one point we were up 500 points and finished down 460 points.
Well, it sounds like a lot of damage. How does this compare to past declines?
So far since Thanksgiving, Gary, we're down just under 5%. That's a pretty rapid decline and not a significant one as big as other drops in the past. But to put this in perspective, year to date, the broad-based market, the S&P 500 index is up over 20% even after this market decline, and the Dow Jones is up over 11%. So we've had a solid year, no question about it, but the recent news has been really unsettling for investors.
Yeah, what a way to end the year, right? So what do you think is behind all this?
The virus has reasserted itself. The real damage on Friday, Tuesday, and Wednesday was all bad news coming about the Omicron variant. On Friday, we saw the first significant market decline, and people were very concerned about the new variant. On yesterday, the market was up, as I said earlier, 500 points, and when the news came out about the first casualty, the first person in the United States who has Omicron, the market went down dramatically, Gary, after that news, and we finished down 461 points. So we saw a swing of almost 1,000 points on that bad news. So the virus is one of the leading drivers of what's going on in the market as investors begin to try and figure out how serious of a threat is this and what's going to be the response to it.
Yeah, I know it's hard to tell sometimes, but is it all because of the virus, or are there other factors at play here?
On Tuesday, Jerome Powell added to the market declines as he said that he will probably remove or stop buying bonds more rapidly than previously thought. And he is more concerned about inflation, instead of being temporary, being a more significant threat to the economy. The concern is that as the Federal Reserve stops its tapering, it will soon start raising interest rates. And that's a move that the market's very anxious about.
And we ask you this all the time, but it's worth it. So, the market's going up and going down. How does this affect you and me?
Probably not much. If you've got a financial plan to get through these very scary times and these very strange times with a new Omicron variant, and who knows when the virus is going to really stop, stay with that financial plan. I think what it does offer some people is a little bit of a relief break, and that many people have been concerned about the fact that this market, which has gone straight up since March of 2020, needs to have some kind of a correction before it makes another advance. So we may be seeing the beginning of this correction, and maybe it's over, Gary, who knows? But I think the key thing is that having a little bit of a pullback is a healthy thing for a market long term.
We'll keep an eye on it. As always, thank you much. We appreciate it.